begin, though, with the aftermath of yesterday's Fed decision. Yields moving lower this morning. Dow and S&P each aiming for a fourth straight day of gains, as I mentioned. NASDAQ going for 5, Jim. The market heard what it wanted to hear, which is that they think the Fed's done.
A lot of shorts have to cover. I felt a combination of what Powell said, which was basically going our way. There was one moment, of course, we said, listen, we didn't talk about cutting, but that plus the under-recognized quarterly refunding statement, which was supposed to be business as usual, that was anything went by now my new hero, Assistant Secretary for Financial Markets, Josh Frost, made me probably pass this guy 100 times going to Wendy's or the Dunkin' Donuts to the Fed. But the fact that there's mostly 10-year and 3-year makes it so that could be equilibrium on the 30. And that plus what Powell said really does create a momentary, let's say, squeeze. Because maybe there won't be enough 30-year paper, and maybe there are not enough stocks in the S&P 500 for sale right now.
Well, I think
including Magnificent Seven.
True. I think what it showed us is that the Fed and the Treasury are both paying attention to what's happened in long-term rates.
I think they're watching. They're watching our shows and recognizing that the tone-deaf nature of Treasury no longer cuts it. I think that the attack. Look, people react to attacks. They'd like to not. They'd like to all be just.
You're talking about Druckenmiller?
Well, I think that Druckenmiller's not alone. I mean, the idea that you shouldn't pay attention to what the market says is something that Secretary Yellen probably didn't want to be known as. Look, Secretary Mnuchin, Secretary Geithner told me multiple times that my strategy of going long would cost the Treasury a great deal of money. And Geithner never traded, and Mnuchin, I know it. I worked for his dad. I think he was just poorly served by his own thinking.
You're saying that everybody did. No one took advantage of the low rates
no,
to issue long-term
you know what?
debt.
I mean, Gary Cohn, whom you know quite well,
Yep.
I said to him, why don't you do a 50-year? It got a little laugh, kind of like got a laugh from the they know nothing. Maybe I am a legendary Wall Street funny man.
It would have been a good move, certainly now that they're going to have to issue a
Woulda,
lot
shoulda,
of debt
coulda.
at much higher rates,
right.
And that's going to cost. But to your point, I think that announcement yesterday, lower than expected, certainly on the issuance at the long end, on top of a weak ISM, I should note, which is really changing GDP expectations for the fourth quarter and bringing them down. The market's cheering softer economic data, as long as we're not barreling into a recession. And then Powell switching his message a little bit, saying the risks are more balanced in terms of over-tightening or under-tightening.
Did you detect the kind of pixie smile that maybe he's getting it right?
I think he felt good
and
when he
said
talked
unit
about
labor
inflation.
costs. I'm sorry, I didn't mean to talk over.
No.
But unit labor costs up, minus 0.8. It's going his way. Now, obviously, tomorrow
Jobs day.
We have Apple tonight, and we have unemployment tomorrow. These are two such big looming items that they are the they're the goalposts. So we don't want to move them after tonight and tomorrow. But anybody who's short this market, anyone who's adopting morose Mike Wilson's view, he doesn't comment, I think, on Thursdays, is going to be is going to be caught trying to figure out what happened to their year, because the shorts had their way until this week.
Well, part of it is earnings, and earnings have been a little bit bumpy, but mostly okay, and it feels like CEOs are attuned to the macroeconomic risk, and they're feeling a little more cautious, but they're not talking about recession. And there's some really good stories out there, like Starbucks.
Of course. Now, I'm seeing them today, and I have them on tonight. And it was an excellent story. And U.S. domestic was fantastic. You watch football. I know you watch the...
the Bengals only.
Well, that's okay. But the refs are particularly bad this year.
Weekend.
And a lot of times what happens this year, they're really terrible. And there's a lot of them upon further review. Upon further review, Meta was good because ads came back according to Pinterest. Upon further review, Google was good because YouTube turned out to be very strong. Upon further review, Amazon at 117 was a major miss because they delivered the number. So you have these upon further reviews, and they're very strong. And the initial reaction seems to be almost dictated by the bears, but I hope they covered, because we are now about to have, let's say, a bonfire of Jellystone National Park.
Well, a lot of it this morning does have to do with rates, and I just want to emphasize here. So we've got a 20% chance now that the Fed raises in December. It's not zero.
No.
And by the way, Chair Powell did say that there could be room for additional policy firming if we continue to see inflationary pressures. But the market is treating it that way, and just some of the commentary this morning.
Sarah, do you like that the market, even though he said the discussions are more for tightening, do you like the market's kind of sotto voce judgment that has been wrong the whole time since we had the inverted yield curve? Remember that?
I think the market makes sense because of what he said about the dot plot. So the dots, this is their forecast that they last put out in September, indicated one more rate hike that we were going to get before the end of the year. But did you hear what he said about that yesterday?
Yeah.
He said those dot plots can decay. In other words, they can be stale and we can change our... And playing that down, I think psychologically for the market was like, okay, maybe we don't have to build in that rate cut.
Favorable moment.
Yes.
Because something that is regarded as orthodoxy, he threw out.
Right.
He just said, listen, those who think
they should just throw out the entire dots. They're confusing and they're old anyway, and they don't issue them every
I agree, and that's
meeting.
why I want you at that press conference so you could just really pants the Federal Reserve Chairman.
Just throw out the dots.
Sorry for the verb. But I do think that was the key moment, because what it said was those who think that we have to live by what we said don't look at how we're winning. But how about the fact he won 6 months of good data, and 2 months of good data did not a cut make. I know we'll be playing some gunlock sots. That's a term of art for TV. But, the idea that it could be good or it could be bad, I don't know. That's not where I play it.
I think you just have to watch wage growth, which Powell said he feels good about. We do have that gunlock SOT, because he expects this Treasury rally to keep going. Listen.
It's almost like we're the equity holder back before the global financial crisis in a CDO squared type of financing scheme that ended up causing parts of the global financial crisis. We need interest rates to come down, or we need the deficit to come down, and neither of those are happening with the Fed higher for longer and with these wars that we are intent on funding. I hear the words blank check. We're on a collision course with this DEFCON going to DEFCON 2, and I believe that we've started a bond rally here. I think we've had such a brutal increase. I think the Fed is sounding the right tone. I do think rates are going to fall as we move into a recession in the first part of next year.
A little alarmist there.
Yeah, people come on, the billionaires come on, and they tend to be alarmists. I think that they uniquely keep people who are not making that much money in the market out. They keep them in their 5% CD chains, and it's a shame because there are people who might have wanted to own Amazon because they think it's a good company, and they won't own it because of billionaires who come on our shows, and they do quite often, and basically tell you that, sorry, the door is closed. I dislike that, and I think it's a suboptimal way to think. We can help create opportunity, not by telling people that you should buy Amazon, and I'm using that as a paradigm, but to show that there are opportunities that abound for those who are open-minded and also, I think, people of conviction. And I think the most important thing yesterday was that we might have bond equilibrium, which allows us to then focus on earnings. And I think you're right. I want to talk about a company that you know quite well, Mondelez.
Wow, that was a good quarter.
No, it was a great quarter.
It was a great quarter.
And I think it was a great quarter, and also put to rest something we're going to be talking about later, which is the GLP phenomena.
Yes, we're going to talk about all that, and we're going to talk about volume growth.
Did I jump the gun on that?
You jumped the gun because we do have some breaking news from Ford releasing its October sales numbers, and we want to get to Phil LeBeau with the latest there. Phil.
Hey, Sarah, Ford's October sales dropping 5.3%. And when you look at the breakdown of vehicles within that 5.3%, October truck sales down 10.5%. But F-150 Lightning, and remember, they're ramping up production of the Lightning, the all-electric F-150, up 52.4%. The Mach-E in October, sales down 10.6%. And one last note, we've talked about the pivot that Ford's making towards hybrids. In October, Ford had its best month ever when it comes to hybrid sales. I was told by somebody that the F-150 hybrid, 2-to-1 sales over the F-150 Lightning. That shows you that there is that demand that's in the market, guys, when it comes to hybrid vehicles, which, by the way, are outpacing electric vehicle sales for the industry this year. And also, Jim, you'll find this interesting, October, second straight month, where internal combustion engine vehicle sales dropped under 80%. Here in the U.S. So we're clearly continuing to see the meltdown, if you will, not a meltdown, a slow melt of internal combustion engine vehicle sales.
But were you ever right when you said that Jim Farley was really going to emphasize He's going to emphasize something in between, basically, and I think that's terrific. The hybrid is a great seller. Phil, let me posit something to you. There was a lot of people. There was a twin blow against Ford. There was obviously the union. People didn't like the quarter. But then there was also this Tesla, this Cybertruck. $100,000 for a Cybertruck. That I have a Maverick, okay? Apparently this does not have the payload of a Maverick, which fits in a small parking spot on any urban street in this country. I checked, and the durability of the metal is not there. I wonder whether this man can sell even 50,000 of the 200,000 Cybertrucks, and this may be Ford's era after all of the Sturm and Drang about Sean Fain and how he took it to farming.
I will say with this regard to the Cybertruck, and we should see the first ones delivered at the end of this month. At least that's the plan from Tesla at this point. It's going to be a slow ramp up in production. They're not even going to get up to where they would consider full production until well into 2025. And I also think you should keep this in mind, given the price point, given the design, given the capability of the vehicle and what it's designed for. It's going for the urban market, particularly those urban markets that are into electric vehicles. Southern California, Oregon, Washington, the coasts. You're not going to see the Cybertruck in big numbers in Kansas City, St. Louis. I mean, it's just not going to sell there. Will there be some? Yes, eventually there will be some. But I do not look at this as one, Sarah, that a vehicle that people are going to say, well, I'm not driving the Chevy Silverado or F-150 anymore. I'm driving the Cybertruck. I just don't see that happening.
Yeah, as a threat there. And in the meantime, it faces enormous challenges, according to Elon Musk, in getting off the production line.
Yeah.
Phil, thank you. Phil LeBeau. I also think
bet.
the upgrade to investment-grade credit on Ford is a big deal.
Yes,
that
it was.
This week.
Very unheralded, in part because there was a sense of actually disarray at Ford. I disagree that Travel Trust owns it. Look, I can't be happy with a stock that goes down big. I am happy that we got through the labor negotiations and the fact that what Phil said about the really profitable line, F-150, is fabulous.
All right, well, they're going to have to pay as much as 25% more in earnings over 4 years for the
UAW
Cybertruck
after that.
Workers. I think they're kind of cool.
Cybertruck, they're cool. $100,000, great. It's cool. I'll get I'll buy 25 Brioni suits for that.